An algorithmic stablecoin designed to maintain a value pegged to the US dollar has crashed by 99%, and another token that was making waves just weeks ago has collapsed by 85%. The bad news doesn't stop there, as a well-known crypto company has announced it's on the brink of bankruptcy. We'll finish today's episode with something more optimistic related to Ethereum and XRP, so stay with us until the end. And of course, we'd really appreciate it if you hit the like button, drop a comment and subscribe to our channel so we can keep doing what we do. We start with Balance Coin, an algorithmic stablecoin that was supposed to maintain a price around $1, but instead crashed by more than 99% after a serious exploit in the protocol. According to the information available, hackers managed to manipulate the token minting mechanism and flooded the market with a massive amount of new BLC, instantly sending its value almost to zero. This is a classic example of how algorithmic stablecoins look stable only in theory, but under real pressure the entire system collapses within seconds. Balance Coin is part of the broader Balance protocol ecosystem, which promised decentralized stable assets pegged to various fiat currencies. After the exploit, however, trust evaporated, liquidity dried up, and the token's price fell to levels that practically make it unusable. Investors are furious, and the team behind the project claims they're working on restoring the system, but at the moment it's unclear whether stability can be recovered at all. Additional pressure comes from the fact that such crashes often trigger chain reactions across the ecosystem because many users rely on these stablecoins as collateral in other protocols. This isn't just another small token collapse, it's a reminder that algorithmic stablecoins carry enormous risk. When stability depends on code instead of real reserves, a single bug or manipulation can destroy an entire project in minutes. And if anyone thinks this is an isolated case, history shows otherwise. Remember Terraform and their UST? It was also an algorithmic stablecoin meant to hold $1, but it crashed to zero and wiped out tens of billions from the market, burning countless investors. Balance Coin is simply repeating the same scenario, just on a smaller scale, but the lesson is identical. Another cryptocurrency that suffered a major crash today is DEXE. The token of the DEXE protocol plunged 85% and at the time of recording is trading below $5. What's interesting is that DEXE was rallying earlier this month, reaching $50, and its market cap briefly jumped to nearly $5 billion. It's unclear what exactly caused the crash, as there is no information about a hack, a protocol bug or any negative announcement. However, some users on X believe the collapse may be the result of market manipulation by Binance. First, the price was artificially pumped, then artificially held high to drain short traders, and finally released to crash. In short, someone held a massive amount of tokens and played the market in a way that caused retail investors to lose. We can't confirm it for sure, but who knows, it might have happened. We continue with another unpleasant piece of news. Movement Labs, the company behind the Move ecosystem, has officially filed for Chapter 11 bankruptcy protection, meaning it's on the verge of collapse and needs restructuring to survive. This decision comes after months of chaos surrounding their Move token, which went through a series of crashes, accusations, internal conflicts, and a complete loss of investor trust. According to the documents, Movement Labs owes between $10 and $50 million, while their assets are valued between $1 and $10 million, a massive gap that clearly shows how difficult their financial situation is. Chapter 11 doesn't mean an immediate end, but it signals that the business is in critical condition and needs time to reorganize. The company continues operating under court supervision while trying to create a recovery plan. The problem is that Movement Labs has been losing trust for months. The Move token was marketed as the next big thing in modular blockchain architecture, but instead became an example of how poor management, lack of transparency, and internal disputes can destroy a project. Some investors claim they were misled about the project's real condition, while others say the team acted chaotically and without a clear strategy. All of this led to massive liquidity outflows, a price collapse, and ultimately today's bankruptcy filing. It's yet another example of how even ambitious projects can fall apart when stable leadership and transparency are missing. And although Movement Labs claims Chapter 11 will give them a chance to reorganize, the reality is that market trust is extremely hard to regain after such a blow. Time to bring some optimism into today's episode. The past month delivered what many analysts consider a strong bullish signal for Ethereum. Nearly 1 million ETH have been withdrawn from exchanges, roughly $2 billion, and moved into private wallets, staking, or long-term storage. This matters because when exchange balances drop, it means only one very simple thing: sell pressure decreases. When investors expect a decline, they keep assets on exchanges to sell quickly. But when they expect a rise, they withdraw them into cold wallets because they plan to hold long term. On top of that, withdrawing such a large amount of ETH in such a short period is a sign that big players, institutions, funds, whales are positioning for potential upside. It's not a guarantee, of course, but historically similar movements often precede strong upward trends. When exchange supply falls and demand stays stable or increases, the price usually reacts positively. Another important factor is that part of this ETH is likely entering staking, further reducing circulating supply. And when an asset becomes scarce, the market tends to value it higher. This is one reason many analysts talk about an upcoming supply crunch for Ethereum, a moment when supply becomes so limited that even moderate demand can trigger a sharp price increase. Another positive factor is the rising activity from institutional investors. Over the past 3 days, spot ETFs have been flashing green, which forces issuers like BlackRock, Fidelity, VanEck, and others to buy real ETH, potentially fueling additional upward movement. At the time of recording, Ethereum is trading around $1,920, and according to many analysts, we may soon see a move well above $2,000. We finish with Ripple's cryptocurrency, where recent data also looks encouraging. Large holders, the so-called whales and sharks, with between 100,000 and 100 million XRP, have increased their holdings by nearly 3% over the past 5 weeks. This is a clear signal that strong market participants are accumulating, and the chart is finally starting to reward their patience. On the other hand, micro wallets holding under 0.01 XRP have reduced their balances by 5.2% during the same period. Historically, XRP's price almost always moves in sync with large holders and in the opposite direction of the smallest wallets. When retail loses interest and big players accumulate quietly and consistently, it's often a sign of an upcoming price increase. That's all for today, team. Have a great and successful day, and see you tomorrow.